Back to phone calls. Here is Brian, who's in Peterborough. Hi, Brian.
Hi. I would appreciate David's thoughts on NXP Semiconductors. David has commented on this stock before, and I'd just like to know his present opinion. Thank you.
Sure. So, Brian, this has been one of our big positions in semiconductors for quite some time. It's a stock that I would continue to buy here. NXPI, for those that don't know, is in near-field communications chips, so the kind of chips that go into your Visa card for tap, or that go into an iPhone for Apple Pay, which hopefully will come to Canada at some point. They also have a pretty strong position in automotive. So this is a company that we think has lots of opportunity. When we look at the semiconductor sector, it's an important barometer for the health of the market. Semiconductor sector is performing very well. Semiconductor ETFs, for instance, are one of the strongest performing groups in the market. So you've got U.S. exposure, you've got semiconductor exposure, and you've got secular growth behind you in these near-field communication chips. So they beat the estimate in the most recent quarter. We think it looks very attractive, and I think the stock goes higher from here.
And would you say it's still trading at a reasonable multiple, almost 18 estimated earnings?
Yeah, it's trading 17, 18 times earnings, which is not terribly expensive. It's growing double digits. Earnings growth growing faster than that. So this isn't supposed to be a rocket ship, but it's a company that is participating in a very significant secular theme.
And a good-looking chart, as we saw there on NXP. We will move along to John. He's in Laval, Quebec. Hi, John.
Hi, gentlemen. Hi, Mark. Hi, gentlemen. Thank you for taking my call.
You're welcome.
My question involves Magna International. I've had it for quite a while. It split 2-for-1 a few weeks ago, but there's not much momentum, and I think my problem, I own too many securities. My question to you, would you hold on to it and be patient, or would you exchange it and put it into one of your top picks, or even Apple or Activist, like you spoke about at the beginning of the show?
Right. Okay.
I'll hang up and listen to your answer.
John.
Thank you.
So, John, keep in mind that the market's been consolidating over the last 3 months. So this has not been performing poorly relative to the market. Market has been consolidating. The auto sector, we think, looks very good. Magna would be in our top 3 positions in the firm. So clearly, we believe that this is a great holding. Yes, it's a Canadian company, but really you're buying a global business. And to think that they've been very effective in the use of capital. We think there's opportunity for them to make acquisitions, which could be game changers. So that's a positive. Certainly, they will benefit as Europe starts to improve. So I would hold the stock here. Really, I mean, the stock's trading in the U.S. at $54. The stock trades at $56. It breaks out. So that's $2 from here. I think that it's very attractively valued. And the most recent quarter, they beat the quarter by 13%. The management's had a history of managing this thing very well and beating expectations.
Here is Willam, who is in Ottawa. Hello there.
Hello, how are you?
Very well. How are you doing?
Okay. This question is for David. It's about CGI Group. What's the outlook for next 2-3 years? And is there any acquisition on the horizon? And would you buy it now? And how does it compare with OpenText in the IT sector?
Okay. So, Willem, CGI Group, of course, is in the services business. They get contracted to manage IT services for corporations and government bodies. They have had a history of making very good acquisitions. This is a Canadian company again, but with big U.S. exposure. So it's dependent on improvement in the U.S., but they also have a very stable business in their government-related business in the U.S. So quite different than OpenText, which is really a software company. We own CGI Group. I would buy it at these prices. The stock's been consolidating over the last 2 months, sort of in the $52 to $57 range. It's in a sector, IT services, which we think looks very attractive. We also own Capgemini in Europe, and we own Gartner Group in the U.S. So we have 3 companies within this sector, which means we really think that this is a good sector to be in. Corporations are going to spend a lot of money on technology going forward with all the security concerns, and the financial services industry has a lot of money to spend, and CGI participates in that space.
You just mentioned Capgemini. We have a question on another European company here. Lisa's in Toronto. Good afternoon.
Hi. I wonder if you could recommend for me a European company that I could buy into for a very long-term hold, preferably something dividend-paying. I'd really appreciate your recommendation. Thank you.
Sure. So, Lisa, there's a whole bunch of companies we could talk about. We have been building European exposure. Of course, one of the things you need to know your take on is currency risk. And we do think that the euro is likely to remain weak and maybe weaken further versus US dollar. So we have been hedging a lot of that exposure. But that being said, some companies really benefit from a weak euro. I would take a look at SAP, the software company. SAP is in enterprise software. They were one of the very early movers into software as a service. They were also very early in the move into cloud-based computing. So this is one that we think is really interesting. In US dollar terms, the stock has been rallying recently, even though the euro has been weak. So I think that this is probably a good long-term hold. We like technology, we like software, we like the market position that SAP has, and it pays a 2.5% yield, which is nothing to sneeze at.
And within the last several weeks, it broke above its 200-day, tested it, and now it's shooting up above that and came out with some earnings and revenue numbers today. Thank you, Lisa. We will take a break and get back to questions after this.